I'd like to introduce Sandra. Sandra Moody is her full name, and she's worked in the mortgage department at the credit union here for more than 8 years. Time flies when you're having fun. She says her favorite thing about working for the credit union is being able to assist our members with their mortgage needs and ultimately helping them achieve their home buying dreams. Couple fun facts about Sandra. We were just talking about this. She enjoys traveling with her husband, shopping, and trying out new craft beers. I'm with you on the craft beer thing and traveling, not so much the shopping. And speaking of traveling, her favorite destinations were Australia in 2019 and Disney World with her family back in 2020. Lastly, I know this personally about Sandra. She loves to dote on her two grandchildren whenever possible. Sandra, I hope that was a good enough introduction. I'll check in with you a little bit later for questions and other things, but for now, the floor is yours.
Thank you so much, Jack. So, as Jack said, we really appreciate everyone being with us today, the ones that can join us. We hope that we share some valuable information with you. If you are looking to currently refinance, or just let us plant that seed today that maybe you're looking to refinance further down the road. So we hope we answer your questions, and we give you some information that might help you in the future. So let's get started. And so today our agenda will be to determine if refinancing your home is your best solution, and then considering your net benefit when refinancing your home, and then exploring the credit union's home refinancing options. We have several different options to offer our members, and so we want to discuss those with you to see which one might be a good fit for you, either now or, like I said, in the near future. So we will have some polling questions for you to answer, and we hope y'all will take the time to do this. And so I'm going to turn this back over to my co-host, Jack, and he's going to do our polling questions.
Yeah, I can't go far. I'm constantly being drawn back in. But we just want to know, for those that are here today, of the attendees, if you could move to your dream home, which of the following would you choose? It's just a fun little exercise for you to practice your polling capabilities. Would you pick a house in the mountains? Maybe a tiny house? Maybe a house on the beach? Or maybe you're more of an international traveler and you'd love to have a house abroad. Or maybe you love your house so much that you just want to keep it and stay there forever. Sandra, if you had to choose, what would you go with?
Oh, give me a house on the beach any day.
Do you have any guesses on what I would choose?
I would say you would probably want a house in the mountains.
Nailed it. You nailed it. That's my sweet spot. So we do have the poll results finalized here, and thanks again for those that are participating. These are anonymous, so we can't call anybody out individually. Looks like the majority is with me, Sandra. 50% said they'd love to have a house in the mountains. We can maybe get a little commune up there. But there's a third of the attendees that would love to join you on the beach. And then another 17% said they love their house, they want to keep it. So I'm thinking that as we go through some of the different refinancing topics today, that a number of you are thinking about keeping your house and you want to refinance it, make the most of it, make sure that you are getting the best deal out there. And that's why Sandra's here to tell us more. So I'm going to turn it back over to you, Sandra.
All right. Thanks so much, Jack. Okay, so is refinancing your home the solution for you? So that's some things we want to cover today to help you if you're thinking about that, or just maybe thinking about it, further down the road. So just several different things we want you to consider if you're thinking about doing this. So is refinancing worth it? What is the interest rate difference? So when you are looking to do a possible refinance, you want to, of course, look at the interest rate, because it needs to make sense for you if you're going to do that. I always tell our members, if you're going to stay in the same term you're in currently, let's say you're currently in a 30-year and you want to stay in a 30-year, well, you want to reduce your interest rate at least 1 full percent to see a real benefit in doing that. How long will you live in your house? Are you planning to stay there long term? Are you planning on maybe down the road selling it to go to maybe downsize or upgrade or move maybe to a different location? So you want to consider that also. How long do you plan on being in the home? Are you refinancing for the right reason? You want to make sure that it makes sense for you financially, that it's going to be a benefit for you and your family to do that. So this is another thing you want to think about when you're considering doing the refinance, if it's for the right reason and is it the best time for you to do it. So you want to consider the net benefit when refinancing your home. What is the true benefit in doing this, should you choose to? So what is the net benefit? It would be the overall impact on your personal wealth from refinancing your home mortgage. And it would also be changes from the mortgage to mortgage as you change the duration of the loan. You know, whether it's the interest rate you're looking to change, or is it the type of loan? Do you want to change? Currently, maybe you have a fixed rate and you want to go to an adjustable rate. So several different things to consider on if you want to do the refinance.
And Sandra, just to kind of summarize, net benefit, it's kind of a term that doesn't mean a lot until we get into the weeds, and we will go into a case study here in a moment. But just to summarize, what is net benefit? It's the overall benefit from refinancing. And and what you want to see is a positive net benefit, not negative, right? So that's what we're going to go through and how to determine that. Carry on.
Exactly. All right. Thank you, Jack. So factors that determine the net benefit, the upfront cost. So you want to consider, you know, how much is it going to cost you to do the refinance? So one of the things that's a little bit different on a refinance is, of course, there are closing costs that go along with it. But the thing about doing a refinance is the majority of the time, you can actually roll in those closing costs into the loan amount. So you're not paying anything out of pocket, except if you do the loan with us, then there would be a upfront $475 processing fee. Other than that, you could roll everything into the loan amount, so you're not out of pocket anything. So you want to look at the interest rates, you know, so maybe your interest rate's pretty good right now. As we know, interest rates have been increasing lately. So maybe, you know, you want to hold at your current interest rate, but look further down the road when hopefully the interest rates are getting a little bit better, and then would be a great time for you to do your refinance. You want to look at the length of the loan. You know, do you currently have a 30-year and maybe you want to change to a 15-year to cut some of that time off that loan? That a lot of times that's a great benefit if you can afford to do that. You want to look at the mortgage balance. You know, how much do you currently owe versus, you know, do you owe a lot? Are you nearing the end of your loan? So you want to take it into that into account. Also, the equity. Do you have a lot of equity built up in your home? So maybe you want to do a refinance cash out. Maybe that would benefit you more than just doing a straight refinance. Or do you maybe not have enough equity in your home at this time, and maybe you need to wait a little while to build up some more equity? You know, what's the future plans for the home? Are you planning on living in it long term? Are you planning on maybe possibly moving, you know, in 5 to 10 years? And then the time value of your money. So many things to consider when doing a refinance to see a true benefit for you and if it's the best thing for you to do. You got anything to add to that, Jack?
Nope, except stay tuned. I know these are abstract concepts, but we'll show you in a case study and as we go through the next few slides, how that would work with actual numbers and concepts. So stay tuned if that doesn't quite resonate just yet.
All right, thanks, Jack. So what is time value of money? So the factors, the number of payments made over a set period and the outstanding balance at the end of the period. And then how much would you spend on each payment and the time value of any money you would save from reducing your payment. So those are a couple of things you want to factor into when you want to consider doing your refinance. And the last consideration you want to consider is, as I've already stated, are you planning to stay in your house? How long are you planning on staying there? Are you planning to sell it? Are you planning to turn the home into a rental property? So we do offer, investment loans. So that's something else you need to take into account and think about when you're looking to possibly do a refinance. Now it's time for another polling question. So I'm going to let my co-host jump in and
Sure thing.
take care of this.
And I do want to point out on the previous slide, Sandra, that for those of you that are, seeing all these considerations, just know that Sandra, her team, are there to help you make those decisions. So as we move forward with your solutions, want to make sure that that's pointed out. So quick little trivia here. According to bankrate.com, and don't everybody go scrambling and doing a Google search, what do you think the average 30-year mortgage rate as of yesterday was in the United States? Was it around 4.5 for answer A? Was it 5.13 for B? Is it 6.42 for C? Or is it closer to 7.25%, aka D? We'll give you all about 20 more seconds to respond with your answers. Looks like we have 3 or 4 still out there. Sandra, I know you probably know the answer, but you mentioned it earlier. What, 6 months ago, we were seeing some rates in the threes, the upper threes, lower fours, right?
Yes.
But as you said, things have changed a little bit, right?
Yep.
Yep. So as far as our results, looks like nobody said A. Nobody was willing to go that low. You're right. We had 22% say a little over 5. We had a third of our group here say 6.42, and a majority said 7.25. Well, I have good news and bad news. The bad news is the rates have gone up probably 2.5% or so over the last year. However, they're not quite 7.25 these days. As of yesterday, according to bankrate.com, they came in around 6.42% APR. So if I may steal the spotlight here a little bit, Sandra, you mentioned it earlier. While it may not be beneficial for you on an interest rate alone to refinance right now, there are other reasons that refinancing may make sense. You went through a few of them, Sandra. Cash out refinance. 6.42 is still a lot cheaper than a lot of debt that's out there. So a lot of folks will consider doing a cash out refinance to pay down high interest student loans, credit cards, other obligations, and that may make the most financial sense for you. Other people may want to increase their monthly cash flow. In other words, extending out the life of their loan, which will then, yes, you're paying a higher interest rate, but you're having more money in your pocket at the end of the day. So these are all things that still may make sense for you right now. And then looking to the future, if rates do go down, we want you to be armed with the knowledge of how that works. So like Sandra said, planting the seed a little bit. When it comes to buying a new house these days, what do they say, Sandra? What's the term of phrase?
You got me.
Date the rate, buy that, or marry the house.
Yeah. Okay.
So you commit to the house long term, but the rate, they can be on the side a little bit. You know what I mean? So that's kind of the mentality we're coming at here. And we understand that the market right now may not be right for everybody. So any other thoughts on that, Sandra?
No, not really. I mean, you just got to really look it over and see if it makes sense for you, make sure it's what's best. So lots of different things to consider. So we do have a little case study we're just going to kind of touch on briefly to see should you refinance your home. So Todd and Amy are interested in refinancing their home to save money. They have been researching mortgage refinance loans, but they have different goals. Todd wants to make lower monthly payments while Amy wants to pay the house off quicker. Their current mortgage is, their balance is $300,000 with the interest rate of 6.124, and their monthly payment is $1,907. So I'm going to throw this back at Jack for him to go over the different things on this case study to discuss.
Absolutely, and I appreciate you driving, Sandra. One thing I want to point out, y'all, again, I know we're going to go through a lot of numbers, a lot of percentages, et cetera, especially in this net benefit case study. So hopefully this will illustrate how to calculate net benefit. I talked about earlier how we have a lot of abstract terms, so you can refer back to those. And then, for the case study itself, kind of get into the nitty gritty of the numbers. Keep in mind, you can request a copy of today's presentation on the survey. So don't feel like you have to scribble down notes or anything like that, more than what makes sense to you with what I'm saying verbally. You'll be able to reference this in the future. So like Sandra said, we have two different mentalities here as far as what these consumers are trying to achieve. The first one wants to increase their monthly cash flow. The second wants to pay off that loan as quickly as possible. And the proposed refinance loan number one, you'll notice that the example given says 40-year fixed. I regret to inform you all, the credit union does not have a product like this. We borrowed this case study from one of our vendors, one of our partners, but it does still illustrate the point of stretching out your loan for a longer term than you currently have. The second proposed refinance loan is a 15-year fixed. I'll point out the credit union does have this option. And the point of this refinance, again, is to shorten the amount of time that you're paying off that loan, therefore paying it off early. So in the proposed refinance loan number one, the 40-year fixed, again, the goal is to maximize your monthly cash flow. The interest rate is around 5.5%. Therefore, the monthly payment would be approximately $1,547. In the shortened loan, the 15-year fixed, the interest rate is a little bit lower, therefore, and the timeline is shorter. Therefore, the monthly payment is a little above $2,250. So taking those numbers in mind, let's do a quick net benefit calculation. So in this scenario, let's say we did both loans, which we know is not possible, but we fast forward 10 years, what would have happened if we took those two loans? And we are on slide 16, right, Sandra?
Yes, sir.
All right. And proposed refinance loan number one, Todd and Amy have saved a total of over $60,000 thanks to a lower monthly payment and factoring in a 2% return. So this is under the assumption that every month in which they had savings relative to their original loan, they put that money in an interest-bearing account that earned approximately 2%. That's how we get to the number over $60,000. Now, at the end of 10 years, Todd and Amy have built less equity in their home. They've been paying down less principal on a monthly basis because they stretched it out longer and they're paying more interest, right? So that means that they actually owe over $34,000 more to the bank than if they kept their original loan. Now, in proposed refinance loan number two, remember, they shortened the timeline. So that means Todd and Amy have actually spent more on a monthly basis, in fact, just short of $59,000 more than if they kept their original loan. However, because they shortened that timeline, they are paying more towards the principal balance, and therefore they owe over $116,000 less on their remaining balance than if they had continued with their original loan. Now, what does that mean whenever we compare them side by side? This is the net tangible benefit. So this means in their hands, or whatever they can tangibly touch as far as money goes, this is the benefit. And loan number one, again, where they stretched it out over 40 years, they were able to gain over $60,000 because their payments on a monthly basis were lower. but you'll remember from the previous slide, and we are on slide 17, right, Sandra?
Yes, sir.
All right. You'll remember that they actually owe a little bit more than if they had kept their original loan. Now, the net benefit is still a positive one. So we look at the net benefit, which is the total amount saved minus the amount that they would have owed, and we get to over $26,000 in net benefit in loan scenario number one. When we compare that to loan number two, they were able to pay off their balance quicker to the tune of $116,000 less that they owe in that option. However, you remember that their monthly payments are higher, which means they paid almost $60,000 more over the course of 10 years than if they had not refinanced. That still comes out with a net benefit. So they are ahead over $56,000 as a result of loan number two. Now, you might be saying, as you're listening to me here, well, net tangible benefit in scenario number two, paid off quicker, is greater. And you are correct. However, what's important to you is what matters most. So both options in these scenarios would have a positive net tangible benefit. So it's a matter of Todd and Amy getting on the same page and seeing what is most important to them. Is it more important for them to have that increased monthly cash flow, which is the scenario for a lot of families? Or do they want to get ahead and make sure that they're paying that loan down as quickly as possible? So again, it really is a personal question. Neither answer is wrong or right. It's about what makes the most sense for you. So I know that's kind of getting in the details a little bit. So if you want any more clarification or if you have questions about how we did this exercise, throw them in the Q&A section. I will point out that if you are considering a refinance, Sandra and her team can help you to calculate the net tangible benefit. Right, Sandra?
Absolutely. We'll be happy to do that. So just give us a call, and we have several mortgage loan officers available to assist you, and we will be happy to do that. So next, we have one more polling question. And so my co-host Jack is going to jump back in and cover this with our attendees today.
Didn't go far. We just want to throw this out there. This is a shameless plug, obviously, but we want to get an idea of what you guys think. Is American Airlines Credit Union mortgage rates same as the national average, but we just add some additional benefits? Is it a little bit higher than the national average, 38 basis points? Or is it 54 basis points less than the national average typically? And I know this is a pretty technical term. Basis points represent the percentages, basically, interest rates. So if you see 38 basis points or 54 basis points, just put a period in front of that and a percentage sign behind it. So if we say 0.38 basis points, or if you hear that terminology out there, it means 0.38% higher, or in the option C, 0.54% less. So hopefully that gets you comfortable with the term basis points. Sandra, I think I talked through all the responses here. And it looks like we're half and half as far as what people think. That we're about the same as the national average, or we're 54 basis points less than the national average. Now, keep in mind, this is a general assumption, but over the years, we've studied our rates relative to the market, and we're typically lower than the national average, typically 0.54% or 54 basis points less than the national average. I think right now, we're definitely lower than the national average, but we're not seeing 0.54 right this second. But suffice it to say, we are still a better option typically than the national average. So back to you, Sandra, or I think we're still on me and you for questions, right?
Yes. If anybody has questions, please send those to Jack now. And
you.
And
you, to both of us, right? You're the expert.
Yes. I'll be happy to answer any questions also. So,
all right. So let's check in with Butel and or Sarah and see, do you guys see any questions in the queue that you can volley up for us?
Not yet, but if our members want to keep them coming, we're here to help answer.
All right. And then for those of you that may have some personal questions or some personal circumstances or scenarios rather, we can definitely connect you with a credit union representative from our mortgage department as long as you indicate that on the survey. So before we move on, Sandra, I just want to tie in the last question about the credit union's posted mortgage rates. Like I said, those are typically lower than what you'll find in the market, but there's also some other things to consider about the type of loan, the benefits of going with the credit union, et cetera. And I believe that's what you're about to cover, right, Sandra?
Yes, sir. You're absolutely correct.
Back to you then.
All right. So we want to discuss the refinance options that our members have if you want to go with the credit union. So we do external refinances. So if you're currently with another lender, you could move your mortgage over here to the credit union, and we'd be happy to assist you with that. If you want to do a refinance cash out where you take some equity out of your current home, then we can help you with that too. A lot of times members will want to do a refinance cash out to, as Jack has already stated, to pay off existing debt such as student loans, credit card balances, because even our interest rates being a little bit higher than they are now, they're still better than the credit card interest rates. So a lot of times members will do a refinance cash out to pay off existing debt, or, they want to take an awesome vacation or do some remodeling on their home, and you can do that with the cash out also. Then we also offer rate modifications to our members. So a rate modification would be that your mortgage is already with us and you want to talk to someone in our mortgage servicing department about doing a rate modification. And I'm actually going to let Jack, my co-host, expand on this because I do know that he's actually done a few of these himself.
Exactly. I do want to circle back around for external refinances. I know a lot of people, there's at least in DFW, tons of construction, tons of new homes going up. And oftentimes with the construction companies, they'll do a construction loan. We don't do those, but what we can do is essentially refinance your mortgage with much better terms. A lot of times the construction loans are for a smaller period of time. They typically have a higher interest rate or a balloon payment of some kind. Therefore, we can assume that and get you set up in a long-term solution. Now, as far as rate modifications, this is under the assumption that you already have, like Sandra said, a mortgage with the credit union. Well, what we will allow you to do typically is, let's say right now we have 6+% rates. Let's say rates drop down to 4 something. And you're like, hey, I don't want to do an entire refinance and pay all the closing costs, et cetera. Hey, credit union, what can you do for me? Well, what we do is we offer a program where you can actually pay a set fee that's based on your loan balance to change the rate of that loan. So let's say you have a $100,000 fixed loan at 6%. And you want to move it down to a $100,000 loan at 4%. Well, you pay 1% of that outstanding balance, aka $1,000, and we will actually adjust your rate. If you wanted to move into an adjustable rate mortgage, remember those are the ones that are set for a period of time and then are variable after that time. We offer a rate modification of 0.5% of your outstanding loan balance, or $500, depending on the amount of your actual mortgage. Most of the time, it's going to be 0.5% or more than $500. But all that to say, keep an eye out for rates in the future and let us know, especially if you have a mortgage with us, if there's an opportunity for us to reassess your loan and your mortgage and find you a better deal. So anything else you might want to add to that, Sandra?
Nope, I think you did an excellent job of explaining that to our attendees today. Thank you, Jack.
You're welcome. One more thing. I like to talk. For the cash out refinances, I recently did that as well. I'll be candid with you guys. I was able to secure a pretty good rate. And what I did is I used those funds to set aside for my next opportunity. So if there is an opportunity for me to get another house or an investment property or something like that, now I have that money set aside. I also use some of the balance to pay down debts, etc., and I was able to get a fixed rate as such. So I'm a big proponent for all of these refinance opportunities, regardless of the rate, if it makes sense for what you're trying to accomplish in your life. So I know that's a little bit more than just dollars and cents and black and white, but there's many reasons why even in today's environment you might consider a refi. So back to you.
Thank you, Jack. And I can testify that Jack worked with one of our excellent mortgage loan officers for these loans that he did.
I'm looking at her right now.
Okay, so let's talk about, I've got to find my slide because I just lost it. Let's see. There we go. So let's discuss the credit union mortgage options. So we do offer fixed rate loans. We offer adjustable rate loans, which means that the interest rate would be locked in for a certain period of time and then it would adjust. We also offer jumbo loans, and then we also offer unique loans, such as we will do loans on log cabins. We offer mortgage loans on manufactured housing. We do investment properties, and then we also offer loans for second or vacation homes. So those are all options that we offer our members. So this is the mortgage application checklist. So we're just going to touch on this very briefly, but for all mortgages, once an application has been completed and submitted to us online, then we will ask for copies of current pay stubs for all borrowers, the two most recent. We will ask for your past 2 years W-2s. And then if you if you're self-employed or have rental income, then we're going to ask for tax returns and all schedules of the tax returns. We'll also ask for copies of your bank statements, your last 2 months, or your most recent quarterly statement to verify your monetary assets. And then in applicable, we will ask for the other items that are below that, but that's only if it is applicable.
And hey, Sandra, before you jump to this slide, or actually stick on this slide, the mortgage application checklist. I know we talked about in our rehearsal and everything about not going through this in detail, but we did have a couple people in the Q&A mention that they are interested in a purchase. So feel free to run through these real quick as well.
Absolutely. So, so first off, any of these slides you can request a copy of, as Jack has stated. Just let us know and we'll be happy to send that to you. In the near future, if you're looking to do a purchase, then we would need an online application to be completed, just like any other mortgage. And then we would need a copy of the signed sales contract. Once you have it, a lot of members come to us looking for a pre-approval, and we're happy to provide that to you. But we would need the things that we discussed previously on the slide before that. And then all these things we would need also. If you're going to sell a home, then we would need, and you're going to use the proceeds to that to help you purchase, we would need a copy of the HUD settlement statement or the closing disclosure to show the net proceeds that you received from the sale. So we would have that. And then, of course, we need a contract. And then, let's see. I think that's pretty much it. Jack, can you think of any?
No, it's basically the same as what we would need for a refi with a few extra bells and whistles. And as is the case with any mortgage situation, there's going to be things where we may need overriding evidence of funds or of agreements, things like that. And those can all be worked out with a mortgage loan officer as you go through the process. The important part for a new purchase is get pre-approved as soon as possible. And if you're looking to refinance, to do that as soon as possible, so we can take advantage of whatever rates you're going after.
Absolutely. So, for the mortgage application checklist for refinance, these are the things that we could possibly need from you. If you're doing a refinance and your lender is someone else, then we would need a copy of your most recent mortgage statement that shows the lender and the account number. We could possibly request the original title policy. And if you live in Texas or Florida, then we will definitely need a copy of your most recent survey, as long as no changes have been made to the property. And then below are some other things we could possibly ask for, not necessarily will, but if you have those items, we could possibly ask for those also.
Right.
If they're applicable.
And Sandra, I do want to point out, I know we went through the checklist and that we offered up the presentation. I want to point out that if you request a copy of today's presentation, we'll send it to you in a PDF format. But in addition to that, we do have a couple other resources that include the checklist, reasons to buy a home, reasons to refinance, things like that. So suffice it to say, if you request a copy of today's presentation, we do have some additional resources that we'll send to you, in addition to what Sandra's about to share with you as far as contact information goes.
Yes. So we have many tools and resources for our members to use when it comes to doing a mortgage. I hope you will utilize all the tools that we have on the credit union website. We have some fabulous tools for our members to use at any time, 24 hours, 7 days a week. So check those out to see what tools we have that could help you. Also, we have resources. So we have many mortgage loan officers here to assist our members. We do mortgage loans all over the United States and all 50 states. And so we do have many mortgage loan officers that can meet with you in person if that is what you wish to do. We actually have 12 mortgage loan officers in the state of Texas to meet with our members face to face. We have 3 in Oklahoma. We have 1 in Florida, and then we actually have 2 in New York at JFK. If you wish to meet with a mortgage loan officer in person, then you could schedule a time to meet with them. Also, we have our websites, the credit union website, and also our home loans website, where the application is done, and then the tools there to assist you. And then we have phone numbers. If you want to speak to a mortgage loan officer, you can call, and we have an extension also for our Spanish speaking members. So the extension is 4203. If you'd like to speak with a mortgage loan officer in Spanish, we have several that can assist you. And then we do answer the phones Monday through Friday, 7 a.m. to 7 p.m. and on Saturdays from 9 to 3. If you want to speak with someone over the phone, we can assist you in completing the mortgage application over the phone. If you need some assistance, we're happy to do that. We're happy to answer any questions you have at any time, because that's what we're here for, is to assist our members and to make this as easy as a process as we can for all of you.
Hey, Sandra, one thing I want to point out, and I need to update this slide, for the homeloans.org URL, it's kind of funky. You actually have to put in www.homeloans.org. Since we do have a little bit of time, if it's okay with you, I just want to share my screen and show our attendees what that might look like and what kind of tools are available at the homeloans.org website. Are you okay with that, Sandra?
Absolutely. I think that's a great idea.
All right. So I'm going to take the presenter privileges back from you. I promise I'll give them back. All right. So I'm going to attempt to share my screen. If you want to let me know if you're seeing what I'm seeing, it should be our home loans website.
Yes.
Awesome. All right, so I am not going to go through everything here, but I just wanted to get you guys comfortable with some of the resources that are here. There's a number of different tools, calculators, etc., that you can utilize to make the best decision possible for you, or at least to brush up on some knowledge before you start visiting with a loan officer. Always helps to know what you're going to be talking about before you talk about it, right? So over here, there's a number of different ways that you can check our rates. You can talk about our loan options, etc. But the main thing here is that you can apply. And the best way to get your application into our mortgage loan officers is to apply online. That allows them to efficiently collect as much information from you as possible and to work your file through this portal. Is there anything that you're seeing here, Sandra, or any other tips, tricks, et cetera, that you'd like me to point out relative to the homeloans.org website?
No, not really. I mean, I think all of these that are you're showing us are great tools for our members to use. It can help you calculate a payment. It can help you calculate an interest rate. It gives you several different great tools to use, and I encourage our members to utilize these tools because they can really help you out and help you understand more of what you're looking to do.
So I'm just setting up a quick scenario here. I clicked on Find Rates, and this will take you to this page, Check Rates with our loan consultant. These rates that are published on this website, Sandra, will always honor these, right?
Yes.
Okay. So what this allows you to do is to create a scenario or a case for your unique situation. You can always play with the numbers, etc. So in this case, I threw in home value 200,000. The mortgage remaining is 100,000, but let's say you want to do a cash out refi of 140. I think that falls within our limits for the most part. I'm choosing Texas just because that's where I am. We're based in Tarrant County, so I'm going to pick that. For this scenario, we're going to assume that this is a single family home that was built up and that it's not attached to any other options or any other properties. Again, it's detached. And then we're going to assume here that it's your primary residence just because this scenario probably fits a majority of our attendees today. So when we click Find Rates, it should bring us our different options. And we talked about earlier, or at least Sandra did, that we have fixed rate, adjustable rate, we have different terms, they may be in different locations, etc. But this gives you the ability to understand your rate, the APR, your estimated monthly payment, what you might need for closing and reserves, and things of that nature. Now, a couple components that I want to talk about on this page. Number one, and this is something that I think every person that's looking at a loan should seek to understand, and that's the APR versus interest rate. The interest rate is what it says. That's the percentage you're going to be charged on any outstanding principal that you have. The APR, however, is the total cost reflected in a percentage. So this is going to consider things like fees, closing costs, etc., that go into the entire price of that loan. And I point this out because when you're comparing interest rates to other interest rates, that's not an accurate depiction on what it's going to cost you as the consumer. Always, 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 whether you're looking at a car loan, credit card, mortgage, whatever, compare the APR. That's the true cost of a loan. So that's a little out of scope, but want to point that out. The other thing I want to point out, and I'll let you speak to it a little bit more, Sandra, is the closing costs. The amounts that you see published here, if you go to, say, details, this is going to make basic assumptions on the cost of things like appraisal, the underwriting fees, any kind of surveys or title insurance, things like that. And these are a little bit higher than what you might see, but because we don't know what different counties, states, etc., are actually going to charge, we tend to be more on the conservative side. Sandra, do you want to speak to that in any more detail?
Yeah, what Jack is stating is true. On a refinance, Our members are actually the ones that get to choose the title company they want to work with for their closing. The majority of the closing cost is actually paid to the title company. It's not paid to us. And title companies charge differently. So we always just give a high estimate on all of those fees because, as I stated earlier, we do mortgage loans all over the United States, and there is no way for us to know what every title company or attorney is going to charge for their fees. So we give a kind of a little bit of a high estimate on those just to make sure, you know, we get everything covered. Now, I will tell you the fees that we charge here at the credit union to process a loan for our members are very low, and they are flat fees. We don't adjust those fees. And like I said, they are very low compared to other lenders. So,
And we
but
won't
yes,
charge that until we get the green light and we are fairly certain, if not absolutely certain, that this will get funded. So
yeah,
that's one cool thing about the credit union is we don't take an upfront processing or application fee. We wait until that pre-approval, we have all the information, and then in order to cover our costs associated, I mean, Sandra's not free. Her time is valuable, so we want to make sure that we are proceeding to that point, and we're going to do all the work to push this through, that you, as a consumer, as a member, have a little skin in the game as well. And like Sandra said, this is extremely low compared to other lenders, brokers, etc.
exactly, exactly.
So for the sake of time, I'm going to turn it back to the presentation at large, but definitely wanted to show that to our members in hopes that that can get you interested in going and playing with those calculators or those options yourself, so you're that much more educated whenever we do connect you with a mortgage officer, whether it be for a purchase or a refinance. So let me give that presenter ball back to you, Sandra, and let you take it back.
All right, thanks so much. So just to cover a little bit of the member owner benefits and why to do a mortgage loan with us, our rates are very competitive. I would say they're probably the majority of the time we're going to be lower than most lenders. We have low processing fees. We only charge $4.75 as our processing fee to process a mortgage loan for a member. Also, we have 100% in-house lending. So our loan officers are here, our underwriters are here, the processing is here, everything is done here. And but the best thing, I think the best thing about our mortgages is that we don't sell them. We keep them here, until they're paid off. Also, something else you might want to know is we have no prepayment penalties. So if you choose to pay off your mortgage loan early with us, we are not going to charge you or penalize you for doing that. Some lenders will charge you a prepayment penalty if you choose to pay your mortgage off early, but we will not do that. And we always maintain your mortgage here until you are ready to pay it off. So you don't ever have to be concerned about us doing that.
And that allows our members to take advantage of that rate modification program. So that's why we're able to do that, because we keep our loans. So that's a really cool feature.
That's right. So now I'm going to turn it back over to my co-host, Mr. Moore, and let him discuss some of the promotions we have.
Excellent. And before I jump into this, I just want to point out, y'all, that the Q&A has been a little quiet today. Either we're doing an awesome job or everything's going way over everyone's head. If it's the latter, feel free to throw in a question and we'll save a little bit of time here with our remaining 8 minutes. So for this slide, though, I do want to point out a couple promotions, especially those related to the credit union itself. First of all, you're not a member, join. You can absolutely join by scanning that QR code. It'll take you to our offers page, but there is an opportunity to join there. And when you join, or when you seek to join, make sure you use promo code BD4412. If you need me to put that in the chat, or if you need that via email, again, that's B as in boy, D as in dog, 4412. That will take care of the opening deposit of $6. If you do that online, it's at the very, very end of your application. Now, as far as special offers that we have right now, you can find out the details of all of those by going to aacreditunion.org/offers, or you can scan the QR code you see on your screen today. In relation to our topic today, I want to point out that right now, if you secure a new mortgage loan with us and you open a new Visa Platinum Rewards credit card, you can receive up to 60,000 connection points. Now, connection points are similar to what you might find on any other rewards credit card, where you can redeem those for travel, gift certificates, name brand merchandise, etc. So again, look at securing a new mortgage with us or a refinance, and you stand to earn connection points with our Visa Platinum Rewards credit card as well. Speaking of financing or refinancing, I always like to highlight our vehicle loans as well. Right now, they're as low as 3.35% APR. So that may be another way if you tuned in today to get some cash out or something like that. If you have equity in your vehicle, we can certainly help you with that. Or if you're looking to purchase a new vehicle, definitely come to us, get pre-approved, and we can try to get you as low of a rate as possible. And speaking of low rates, this is my final plug as far as offers go. If you are carrying a credit card balance, maybe at a high rate credit card outside of the credit union or something like that, consider opening our low rate credit card. Right now until the end of March, we're actually have an offer for 0% transfer of balance fees. So you will have cost nothing to transfer your balances over. And then the other bonus is that you can actually take advantage of no interest on your first 6 billing cycles whenever you transfer those balances over. So that may be a way for you to increase your monthly cash flow or to transfer high rate interest credit cards to a lower rate. Right now, our lowest interest rate on our low rate card, it starts at 11.24%. So that's another great way, even if we didn't have the offer of 0% interest for 6 months, another great way to save some money. For the sake of time, I'm going to jump to our next promotion, which is an ongoing promotion. And we just want to remind our attendees here today that your family members are eligible to join the credit union. So if during our discussion today, there was something that resonated with you and may be able to help out your grandparents, parents, brothers, sisters, spouse, kids, grandkids, let them know they're eligible. You can find out more about how to earn $25 for each referral by going to aacreditunion.org/refer25 or scanning that QR code. Ultimately, at the end of your family member's application, they'll just want to make sure they use promo code refer25 and your information so that we can identify that you are privy to that $25 referral. The cap's at $250 a year. Last I checked, we got about 11 and a half months for you guys to go. So hopefully you can share the benefits of the credit union with others and stand a pocket a little bit along the way. All right. So for all intents and purposes, we're at the end of our meat and potatoes of today's presentation. I want to throw it over to Sarah or Butel to see if we have any questions that have popped up in the queue.
Jack, there's one that is like asking what interest rate is an ideal interest rate to move forward on refinancing the mortgage.
That really is something Sandra could speak to. Is there a sweet spot or any advice on what people should look for interest rate wise whenever they're considering refinance options?
I always tell the members, if you're going to stay in the same term you're in, you want to at least reduce your interest rate at least 1 full percent to see a real benefit in that. Or, of course, if you can afford to change your term to a shorter term, you'll see quite a bit benefit in that also, the savings and the money. But as far as the interest rates go, you want to reduce your interest rate at least 1 full percent in order to, see some good benefits from that.
And that's a great point, Sandra, for like the cost savings aspect of it. But as we talked about earlier, there's other components that might incentivize you to move forward with a refi. Maybe you just need a little bit of a relief on your monthly payments and you've been paying for 10 years and you need to stretch it out a little bit longer. Yes, your interest rate might be a little bit higher right now, but it gives you a little bit of padding on a monthly basis. So that could be your motivation.
Yes.
You may have other debts that are better served by refinancing. In other words,
Absolutely.
interest rate of the home is going to be cheaper elsewhere. So again, there's not a magic number, but if you are doing it just for cost savings alone, Sandra is absolutely correct. 1%, 0.5%, that area at least is going to help you to recapture the costs associated with a refinance.
Yeah, and I would say, if you're looking at different options like that to see what your best savings would be, either get online and use our tools that we offer, or call our phone numbers and talk to a mortgage loan officer and let them run a couple of different scenarios for you to see what would benefit you most. And they can answer any questions you have also. So we have some great resources here for our members, so please make sure to use all those resources.
Sure. Butel, any others? I see
What
one.
is the best feature about going from a fixed to an ARM? And if you can put up the slide number 25, I believe, which has the address, the website, and the phone numbers. There you go. For those that are needing assistance with the refinancing or the financing itself.
Great. So what would you say, Sandra, the best features about the potential of going from a fixed to an ARM?
Well, I would say going to ARM, your interest rates are probably going to be less. They're fixed for a certain amount of term. So if you're looking possibly, if maybe you're in a fixed rate right now, but maybe in the next 5 to 10 years, you're going to be wanting to sell that home or possibly move or whatever, then you might want to consider doing a adjustable rate mortgage. I always tell the members, if you're only going to be in that home a certain amount of time, look at doing an ARM because it has some great benefits to it.
And just to piggyback off of that, we do offer 5-1 arms, 7-1 arms, and 10-1 arms. So to boil that down into layman's terms, let's say you did a 10-1 arm. That means whatever rate, which is typically lower than a 30-year fixed, that you get on a 10-1 arm, that will be fixed for 10 years. And then at the end of 10 years, it will adjust based on what the market price of mortgages are. Of course, there's floors and ceilings of how much they can move to try to suppress some of that potential volatility. But then every year it'll reprice. And there are additional parameters, but to answer your question, like Sandra said, typically it's for the interest rate.
Yes.
Anything else, Butel?
No, nothing else at this time.
All right. Well, that concludes the majority of our presentation. I know we're about a minute or two over. Appreciate you guys sticking around. I just want to close by saying on behalf of Sandra, myself, and the entire credit union, we really want to thank you so much for investing in your own financial well-being by spending some time with us today. Clearly, you're motivated and you have the acumen to try to understand these concepts, and we're here to help you understand and walk you through the process. In order to do that, again, if you have a question or you want to work with an individual, indicate that on the survey. It should be in your inboxes now, and we'd be more than happy to reach out to you by early next week. Again, that survey will close on Monday, at which point we'll start reaching out to folks. We will also include a copy of today's presentation as well as those additional resources if you indicate it on your survey. And then lastly, as this slide shows, be sure to consider future webinars by visiting aacreditunion.org/events and keep checking back as we currently have all of our January and February topics posted, and we'll continue to add to those in March, April, May, and beyond. Lastly, be sure to follow us on Facebook, Instagram, Twitter, and newly added in the last year, YouTube, for helpful financial tips and to learn more about upcoming webinars. We will post this recording up there probably by mid next week. So if you need to review it or share it with your colleagues, please feel free to do so. On behalf again of the entire credit union, we encourage you all to stay safe, healthy, and happy out there. Let us know if there's anything we can do to help you on your financial journey. Sandra, I'll let you have the closing words. Anything you'd like to add?
So thank you so much, Jack, for all your help today, and the rest of the team that was in on it answering the questions. And I just want to thank everyone that attended today. I hope you found the information valuable. I hope you got some questions answered that you might have had. And if you didn't, please reach out to us. We're here for you. We want to help you. We want to take care of you. You're our members and you matter to us and you are important to us. So I hope everyone has a fantastic afternoon and we look forward to seeing you again soon. Thank you so much.